In this video, I'm going to talk about the advanced market structure. I've done a video on market structure recently where I explained the nitty-gritty, what you need to do in order not to fall as a trap for the big players. So in this video, I'm going to take it a little bit further by showing you the advanced structure so that you can add this to your trading tool to make money in the forex market. So without wasting time, we're going to start with this hypothetical illustration of the market. And you need to pay close attention to what I'm about to share with you. Because market structure done right is simply you making profit in the market. So without wasting time, you can see here, price was initially in a downtrend from this arrow here, created a low, and that low broke structure. The moment this happens here, we see market comes back down here, but it didn't come back in one move. There was a series of high and lows before getting to this point. So here we have this move push up, didn't take this high. So in that case, we have not confirmed our market structure being bullish yet. We only took out this high, but some people, for one reason or the other, they will consider this something. No, this is the high that was created and we want this high to be taken. Okay. So now price came back down, eventually pushed. This is how the market works, okay? Eventually broke this. Now the question is, which low took out that high? Is it this or is this? This is the main low here, because this was the low that started that move. So whatever you see happening in here is simply fractal nature of the market moving up and down before taking out this high here. Now, market created the high, so we have a higher high. This is a high here. This high is higher than this, so that's what the HH, higher high, stands for. So we created a higher high, and then the market didn't just move down straight, okay? It moves up and down, creating a low here, push higher, creating a low, taking out this. To some people, they will call this a break of structure, which is not, okay? A break of structure or a chalk is simply when market take out this low first, then a complete shift in market structure is when it takes out the second one. If you don't understand this, watch my first video, you have a proper understanding. You have to wait for that leg that created the high that was taken, the low here that created this high, needs to be taken to destroy that range. Once you take out that range, then you have a shift, a proper shift in market structure. This high here created this low and then eventually broke this high. Now my question is, what happens if market comes back to take out this low and then continue going out? Now this is no longer the higher high. This is just part of the internal move. This low now creating a high, so this is the new high. Yeah, this is the advanced nature of it. So when you are marking your structure, take note of the latest leg that was produced. If market come back down whatsoever to take out that low, so you have to mark your structure all over again. That means this is the low, this is the high, this is what? A higher low now, because it has invalidated this one. Then from here, you can continue moving. That is why I said when it breaks this first one, that doesn't mean a shift in market structure. It's just rearranging the mechanism of that particular chart in order to create another higher high. So you can simply buy once liquidity is taken, or tap into an unmitigated point of interest in here, something like this, unmitigated point of interest. Then you can continue that bullish play. Now when this market moves up, it didn't just go straight. It created a high, a low, a high, a low. Eventually it broke. So this becomes a high. So this becomes a low, high. This becomes what? A higher low. And this is the higher high. Okay? So you don't get confused in this nature. Then this higher high created a low. So this is a higher low. And then there was a break of structure creating a higher high. So you can see what happens in here. You have to take caution here, okay, because when market took out this low, this is not a shift in market structure. No, because some of you, in the last video I told you, some people were looking for trades in here, okay, in order to continue with the bearish market, whereas the market is still bullish, and this is the external high that needs to be taken, okay. So when you are buying in here, you are targeting here, because I know for a fact that the trend has not changed. But if this low held, okay, if this low held, so this will be the low, high, higher low, higher high, okay, higher low, higher high, then higher low again, before we have another higher high. Okay, in this case we have a structure like this. Okay, take note, the only thing that constitutes a break of market structure or a shift of market structure is if this low gets taken. Maybe from here market came back down and takes out this. In this case, it makes sense to buy in here. When market comes up in here, you start selling. Okay, so apart from that, you must treat whatever you are seeing as bullish as long as this level is not taken. Trade whatever, if price is still trading here, take it as what? A bullish signal to go higher. And if you are shorting from here, probably these are areas where you start to take your profit. All right, so this is for a bullish scenario. We have a bearish scenario here. Market creating a high here, a low, market trade up to this point, came back down here, move up here again, and as you can see, it didn't create this with one leg like this. No, it did something like this. All right, so because of this, we can decide to buy in here until we take out this low. So we created a lower high here. We created a lower high. Market gave us chop. Probably you can also enter here based on fair value gaps, based on order blocks and the rest, to attack this low. Now, immediately market took out this low, we created a what? A lower low. Lower low in the sense that it's lower than this. Okay. Now in this case, market didn't go straight. Okay, it went zigzag. And this is how the market prints in real world. This here serves as what? Inducement. Alright, market takes out this, tap into unmitigated areas here, whatever that could be for you. It could be a fair value gap. If you are trading fair value gaps, it could be order blocks, it could be supply and demand. It doesn't matter. Alright, what I want you to see here is defining structure. The structure is still very, very what? Bearish. Now that the market tapped in here, it went down, okay, breaking this low. This is what? Another lower low created. Where is the high? This is the high. This is not the high here, okay. This high now can serve as what? Inducement. Okay, this can serve as what? Inducement. So anything trading above this, you can decide to start selling because it has a higher probability of succeeding. You take a trade in here, give a little push higher. You don't need to cry. Okay, what happens is simply inducement. Then you look for an unmitigated area here to take this trade to the downside. Now, what happens if this high take out this one here? We took out that high. This high was taken. So how is the structure now? Okay, that means we only have one leg of structure. all of these are simply one leg, a high, and now another. Okay, we have a high, low, high. Creating this, initially this was our high, but this was taken down. We only have two highs before that one. Okay, first one, second one. So something like this. This is how it looks like. I don't get confused. Like this, and this is one leg of structure before this, because this didn't take out this. And then, so you need to give yourself rules in this trading space, because it's only rules that can help you. When you have a set of rules, you know when to enter the market, know when to pull your trigger, know what you are looking for. It becomes easier for you to trade. As long as this is below this, now we have how many structure? We have 1, 2, 3. Okay, we have something like this now. 1, 2, 3. 3 impulse leg, 4 impulse leg. But when this happens, taking this out, we have how many impulse leg? 1 impulse leg, 2 impulse leg, and this is the third impulse leg. Okay, so we can see how complex this area is. This is what happens in the real world scenario. So we are going to look at an example with the live market, maybe gold and pounds USD. So let's take a look at gold. Now with this illustration here, I want to quickly point out something here. We have a low here. This is the weekly chart. Why I chose this weekly chart, I just want to explain something. Low, high, low was created here. Now most people will expect this low, they may call this low to be incomplete when they want something that will get up to 50%. No, the market does not need to retrace 50%. It can retrace 30%, 20%, and then move. What you need to do is have a rules to know where to enter that market to continue the trend. Because in a trending market hardly retrace. Okay? So high, low. In this case, this high was taken. From there, this low created a high here. Okay? This high was also created, creating a low. But you can see in between, we have legs of structure here coming down. These are simply fractal nature of the market. Until this low is taken, we don't have a shift or an early shift in market structure. From here, we moved higher, we created this high, market retraced to this level. We take note of this level. Then we broke higher here, retrace here, broke higher, retrace here, broke higher, retrace here. So in this case here, for me, I will consider this one leg of structure. Okay, even though we have some minor retracement here. If you want to know this reason, put in the comment section. Maybe I will do a video on that. But I will consider this one leg, and all of this pullback, this will be my fortress. If market take out this low, then we are extremely bearish. Okay, notwithstanding, in this case here, but if you are to follow the rules I'm giving to you, it's still very important. Let's make it bigger. Now let's assume that these are structural leg. So the lows that was created here, take note of that rule. This low that created this high that was taken, okay, needs to be taken to create a shift in market structure. Okay, so now you can see we have a pullback here. Market went up. You can attempt buying in here, but your buying did not take out this high. Now, what does this tell you? This tells you that all of these are simply inducement, because inducement in the sense that they are weak lows. Weak lows because they did not break structure. So it makes sense for market to take them out and then making this a kind of what? Equal lows. Alright? So I will be monitoring this low to give me a full shift in market structure. All right, so let's mark out our structure here. So we have a I here. Here we have a shift in market structure. Okay, shift. We have a shift in market structure here. So in this case now, gold is bearish from this level. So we start looking for bearish trades. Yeah. Okay. So you can see this low was eventually taken. Yeah. This is the high that created that low. Gave us a pullback. So this is the high we want market to take to continue the bullish move, to give us another shift in market structure to the upside. Let me use, this is the high I want market to take to give us a shift to the structure for the bullish side. Okay, so this high low, in this case we have this now to break because we have created a new low here. This is a new high here, creating a new low, created a high. So in this case now, our last structure before the market took out was this here. So once market closed above this, we have a shift in market structure. Okay, so as you can see now, a high producing a low, another high here. Let me use this so you can see a high produce a low, another high, another low. Okay, so once this got broken, this is early indication. This is an early indication that we might be going bullish, but we need to be selling in here until here gives up. So the moment we have a sell here but didn't go far, we have a weak high created, market now move higher, breaking this. All of these are inducement. You can wait for market to come below those lows before you buy. In this case, you should have confidence that the market is bullish from here. So from this bullish point of view, you start counting your structure leg all over again. In this case, we have a low here, a low, a high, because this is the high that was taken. This is the structure leg, not this high, not this high. Some people start counting it from here. Yeah, no. Low, high, because it took out the high that was created there. That original trading range was taken. Okay, so this is a pullback. Yeah, a break above this. So we have this. So this is another structure leg. Okay, as long as price is still below this, all of these are simply fractal movement. We need price to trade above this to have a high. So that means this low, this high. We have a pullback. From there we broke out this. We have a pullback. From there broke out this. Okay, easy as that. So that is how you continue to do. In this case now, you can see that market failed to take out this. We didn't have a close above that level. So that makes this low here inducement. Okay, so which low needs to be taken before we have a shift in market structure? We need this low to be taken. Why this low? Because this was the low that created that high that was taken last. The low yet get taken is an early indication to start looking for sell. Okay, the moment price starts coming back down to this point, this is where I will be looking to buy. If market comes straight down here, though we have another approach to know the market direction here, because we are still bearish on gold, but we can shift any point. The market here is still very bullish. That's what I'm saying. The market here is still very bullish until this low is taken. Okay, in overall market structure reading. If you have any question on this, put it in the comment section so I can make more videos to enlighten you more on market structure. Because the moment you don't understand this, it becomes so tough for you. Okay, so we don't have any bearish structure playing out yet until we take out this. So this will be the high, and then we have a low. All of these are simply fractal. All right, so it makes sense. If price comes toward the high probability buy zones, you can buy. All right, so this is an example of market structure using gold. Let's look at pounds USD. So now from this pounds USD, you can see that we have a high here. We took out this low, so this is the low that was created. This is high. We had a pullback up. Now we've broken this. This is a lower high here. High, low, lower high, lower lows, lower high, because this is the low that was created. Lower high, lower low. Okay, so immediately this was taken, we created another one here. A lower high, a lower low. Now, when this gets taken, this is simply an early indication. Where do you want us to start looking for bullish move? Once this high is taken. So the moment that high is taken, you can start looking for buy. So in this case, we now have a new structure, a low and a high. All of this here are simply fractal. Okay, liquidity inducement, liquidity engineering, and the rest. And by the way, this is on the daily time frame. So all of these are simply inducement, liquidity. We have a low, a high. We have the pullback here, breaking this. Okay, we have another high here. We have another low here, breaking this. We have this pullback, every pullback. Okay, if this pullback takes out this low, so that means we have from this to this now. All of this becomes a structural leg. So let's take a look if that occurred. Okay, it didn't take it. So from there, you can see the advanced nature of this pullback. Not just a single leg coming down and then it's easy to read. Market will not be easy to read most times. So this is the high. Immediately this gets taken, you've created a lower low here, a higher low. Yeah. Okay. So you don't want this to be taken. All of these are simply internal structure. So when most people start calculating chalk from here and the rest, and they want to take out this low, this is not the external low that is taken. This is where price is heading to. Okay, until this gets broken, I will be bullish when price start getting to this point. I have my way of looking for counter trade entries. That is another video for another day. If you need it, put it in the comment section and I will do justice to that. So you can see market coming back down here to this level. What happened from there? It created another high. So which low was it? This is the low. All right. And so on, we broke structure here. Market pull back, created another high, pull back, another high. Now you can see this market took out this low. But is the market bearish yet? No. We need to take out the low here. Because this is the last high that was created. So this alone simply means early indication. You can start looking for bearish move, but the bullish bias is still intact. Then what happened? Price closed above this. So that means this pullback, this is the low, no longer this one. This is the low that was created from this high. Okay. So for us to have a market shift, that low should be taken. Okay, this is not the high that produces this, this is the low. This is not the low that produces this, this is the low. All right, so market trade up, now giving us an early indication that we can be what? Bearish. But mind you, that is not bearishness. Okay, it's simply an early indication. If there's an unmitigated areas here, you can buy from here. As you can see, price took a move from here, and what happened? We end up breaking that high. So most people trading saying that the market is bearish now. No, they'll be looking for trades in here. They will be looking for trading here. They will look for trading here, and so on. Some will work, some will not work, and the rest. but most of the time you'll be getting it. Your SL will be getting it, and you'll be frustrated that what is happening. I thought the market has changed direction. No, the market has not changed direction. The market has not changed direction. Okay, so in that case, we created another high here. Okay, so that means this is the low. This is advanced market structure. Okay, you can apply within the internal just to have trade ideas, sharp. But if you are looking at the entire structure, you need a proper understanding. Now, what happened? This high was created, pull back, okay, create another high here. Let me use the pen. I created a low here, but that low was later taken, so this is latest low. Pull back, high, pull back, high, pull back, another high. Now, which low needs to be taken to have a shift in market structure? This low. It got taken here, so you can start looking for sell. That means at this point now, this becomes your target, and you can see as you start selling in here, price came, took out that low. Okay, that is how you have market structure on your side, and you will not be confused every time. Okay, so if you have any question, I will stop there for now. If you have any question, put it in the comment section. And also, I'm giving out a discount to join my membership. 50% discount. Link will be in the description. Use it and join so that you understand how to trade profitably.